Let's jump into the chart here and see what we have. So we can see that there was this wedge pattern from the collapse of FTX, and then we went in a very, very quiet range. And one of the little notes that told us that there was going to be some volatility was that we saw volatility in Bitcoin. I think it got to the lowest it had ever gotten. And anytime you go into this sleep mode, there's this tendency to wake up with a bang. And we certainly saw it here. You could see the breakout occurred right there. And as soon as that happened, there was kind of this melt up or bear market rally. Now, the reason why I'm calling it a bear market rally is that until we take out key levels, this is just a run-of-the-mill rip your face off rally. And I know that sounds crazy to a lot of Bitcoiners and crypto people, but if you look at other markets, the S&P, the NASDAQ, even stocks like Tesla, a bounce of 25, 35, 45% in a bear market is actually a relatively common occurrence. So as of now, I think we've rallied about 30, 35% in Bitcoin off of the lows. At this point, we still haven't taken out the psychological level here, which was the FTX high. And you can see how price is stalled there, right? And we're even seeing a little bit of a pullback today, although we're off of the lows. But for me, at least, this is, as of now, it's a bear market rally. I have to treat it as such until we start taking out key levels such as this FTX high pivot. Definitely that FTX high pivot, which is around 21,500. Psychologically, there was a lot of damage done. We know about all the news media, that the coverage that SBF had and the FTX collapse had. And I think on a psychological basis, if we can get price above and hold above that level, that then would then create kind of this confidence in Bitcoin, in cryptocurrency. Another thing that I'll be watching for is, honestly, I want to see where this regulation is coming in. I want to see when this is coming to fruition. If we get regulation and price doesn't dump out and make new lows, I would then say potentially the lows could be in. And the reason I say that is because as soon as we get that regulation, it should create forced transparency. And forced transparency then creates the ability for bigger money to start to take positions. And if we're still trading up here into that, I think the lows might be in. I still am in the camp, though. Let's be clear. I'm still in the bear market camp. I still think this is a run-of-your-mill bear market rally, and I still think we'll make new lows. I think that's a valid approach. I mean, again, I don't think that alone has the ability to make sure that a low pivot is in. I still think there's overlying circumstances, like if you see the stock market collapse 25% in 2023, it's hard to imagine Bitcoin's not going to come back down and retest those lows. But for me, certainly, I mean, you start to see a weakening dollar, that helps. Gold price has really soared recently as well. That's telling you people are definitely looking for an alternative to US dollars. And in many ways, I think to stocks. I mean, I think there's this growing realization that the economy will go into recession in 2023. And what does that mean for earnings for stocks and the valuations as well? So I think, again, Bitcoin is the one that people are going to go to if they're going to choose a crypto. And I'm not surprised to see that accumulation going on. Let's take a look at the chart on Meta and see what it's telling us here. And again, one of the things that catches my eye on Meta is that we've been in this down-sloping trend line here, and we finally broke above it right over here. And again, for me, this doesn't mean we're in a new bull market for Meta. It just means there's a floor in price, meaning that this yellow line now becomes technical support. So for me, at least, what I would be doing is looking for a pullback into that level, which right now is around 113. And I think that's a buyable level on Meta. Now, again, I think Meta is kind of a unique case because it was already pounded down so much going into this kind of bear market. We saw it, obviously, it's corrected immensely over the last, basically 18 months or so. So I think the better case to look at for stocks is like, let's take a look at Apple. And this is a concern for me on Apple, right? So if you look at this bigger trend line that goes back to 2020, look at how price kept hammering and hammering and hammering, and then it broke. And if you look at where the market was when it started to reverse today, Apple was piercing that level, which again was support over here. It's now resistance. So it slammed into that and got pushed back down. And oftentimes when you see this chart set up, the resulting move is a move down like this. So again, for me, if I'm looking at the S&P 500, I'm also very concerned because you have this down sloping trend line, and look at where price was just into today's sell-off, right into this down sloping trend line. So for me, I'm expecting as much as a 25% drawdown in the S&P in 2023. And that's one of the reasons why I think it's going to be hard for crypto to really hold on to its gains if we're seeing that type of drawdown in stocks. It's a tricky thing, right? So my forecasts are saying that the Fed has one or two more rate hikes in them, probably both 25 basis points, and then they're done. And we saw some economic news this morning that was very, very weak. It does portend to show a recession on the horizon. We just haven't seen the jobs market catch up yet. And I think that's going to be one of the realizations for the markets. Now, initially, you're going to see investors cheer because the Fed is going to go back to a neutral policy, which means they're not hiking, but they're not dropping. I think that ultimately the market in the second half of the year is going to start to get very scared over the aspect that inflation remains above 2% and the Fed cannot stimulate even in a recession, right? So if we slip into this recession, my fear is it becomes a long recession, a multi-year recession, because the Fed's not bailing us out due to inflation staying slightly elevated.
Yeah.
Paul, I think one of the things to recognize too for investors is that while the markets have declined, historically, if we look at bear markets, this isn't that big of a decline. The S&P is not even down right now 20% from its all-time highs. And remember, the move from 2009 to these all-time highs, or from the COVID low to these all-time highs, was probably the biggest move we have almost ever seen in the stock market, at least reminiscent of the dot-com bubble move up in charts. So I do caution people that at least in the very least, you got to think we have to head down to that February 2020 high, which was just before that COVID collapse. In the very least, that kind of is the removal of the liquidity put in during COVID. For me on Disney, it's kind of stuck in this little bit of a range, and I'll flip my chart on here just to give you guys a sense of what I'm seeing is, so number one, you can see that when we bottomed out recently around $83 to $84, there was this long-term trend line going back to 2013. And you can see how it tags the COVID low. And then what price did we just hit recently? We actually hit that low right there as well. Now the bounce has now taken us into this down-sloping trend line, and we're battling against that. Now, if we can break above that, that would be a very good positive for Disney. But again, we haven't really done that yet. And so the question is, as these two lines converge, and remember, they're one's slightly upsloping, the other's sharply downsloping, they're going to converge probably in the next 3 to 6 months. Price is going to be forced out of the range one way or the other. If you break out, I think you're talking about a move back to $130. If you break down, that's the more scary scenario where you could be headed to 78 and then potentially down to about 68. So it's a tough one, to be honest. When you're in a wedge patterns are notoriously tricky for figuring out which way they're going to break. But when they do break, there's usually a major move in that direction. Charts are now a little bit short-term extended, and I'll flip them on here for us to take a view at. So short-term, we're at this little level here. We peaked above it, and now we're coming back in today. So this is a very pivotal level around this 174 to 175 level. Now, if it can get through that level, I do think it has some decent upside to about $210. And again, that would bring us back to this area right over here, which would be significant resistance. But again, for me, I'm looking at the bigger question. And the bigger question is, if we head into a macro recession, like a recession for the whole economy, is that already factored in NVIDIA's stock price? And I'm not so sure it is. Again, if you look at the longer term here, there's some pretty significant downside levels that we still may need to get to. So again, I would be a little bit on the careful side here. The one positive, if I can, I'll make a very good bull case for you guys out there. Let me get rid of these trend lines here. So if you want to look for a pattern that has a very good breakout ability, take a look at this inverse head and shoulder pattern. Yeah. Now, again, what does this mean? Well, if this head and shoulder neckline right here breaks, you could get that move up, which again could be north of $200. The break point on NVIDIA would be about $185. So look to see if it can get through 185. Again, beautiful inverse head and shoulders there. It doesn't matter that it's forming. Please understand that, everyone watching. It's only a matter of, does it break out? If it breaks out, it's game on. If not, be very careful.